Hi, everyone. Thanks for tuning in to episode 21 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing for ALN Apartment Data, and I'm joined by the star of the show, the little bit more familiar looking Jordan Brooks. Jordan, how are you?
I'm doing well. The beard is slowly making a comeback.
It is looking good. You're looking more yourself. I know you've been super busy. You've been traveling. You've been talking a lot with a lot of people. So let's hop into it. It's April, and that means that it's time to look back at the first quarter of the year. And we're taking a look at the article from the April newsletter. It's called Q1 Brought a Somewhat New Reality for Multifamily. Before we get into the article itself, though, tell us about the broader economic picture.
Yeah, so really from an economic perspective, we're kind of always paying attention to what's going on with the labor force, the employment situation. Obviously, right now, inflation is a big topic. So the labor force in terms of the total people in the labor force nationally is basically now back to where it was pre-COVID. Kind of in the earlier days of the economic recovery. We saw unemployment rate improvement, but really that had a lot to do with the people that were leaving the labor force. It wasn't so much improvement in labor force participation itself. At this point, at least the size of the labor force is back to where it was, 2 years ago. From an unemployment perspective, the latest number was 3.6% at the national level. Again, that's basically back to where it was before the pandemic. So that's obviously good news on those two fronts. And then from an inflation perspective, the latest number was about 8.5% CPI for the month of March. The big categories for inflation continue to be, energy, gasoline, obviously, but also used cars is a big category still, and groceries. So of course, used cars, it's not something that people tend to buy on a daily or monthly basis. So that kind of helps take some of the bite out of that number because that's one of the highest categories. But of course, gasoline and groceries are more typical purchases, and so inflation continues to be not only a major storyline, but kind of an increasingly important one.
And certainly something that we're all feeling every single day in our own ways. So you mentioned in the article that apartment demand is down really across the board, but where is that decline the most apparent?
Well, if we look at net absorption by price class, just in terms of total units, Class B kind of suffered the largest decline in the first quarter compared to Q1 of last year. Q1 of 2021, Class B saw about 30,000 net absorbed units. This year, it was down to 9,000 units. So a pretty dramatic drop off. If we look, more of on a percentage basis, Class C actually moved into negative territory after a pretty strong result in the first quarter last year. Class D was also negative, but that's more typical for that segment in the first quarter. Class D tends to be kind of slightly negative in the first quarter. Class C, though, is usually in positive territory, and this year we saw that flip negative. Not to a huge extent. It was about 500 net units nationwide, so it wasn't some dramatic negative move, but it was notable that we went from strongly positive to negative for Class C. And as you said, we saw a decline compared to Q1 of last year across the price classes, but it is worth mentioning that Class A, even though net absorption in the first quarter of this year was lower than last year, Class A did at least outperform Q1 of 2020, which was for the most part unaffected by COVID. We really didn't see the COVID impact until the beginning of the second quarter of 2020. So Class A, while it didn't really stack up compared to last year, was more kind of in line with maybe what we're typically used to seeing. Whereas Class B, we saw a really dramatic decline.
As you wrote in the article, rent growth has continued to be well above the normal levels, as we're all very well aware of these days. How do you see that shifting if the demand keeps lowering or if it plateaus?
Well, one of our kind of big takeaways in the newsletter really was kind of this continued decoupling of rent growth and apartment demand. We've seen apartment demand slowing, really going back at this point, 4, maybe 5 months. And certainly, again, on a quarterly basis, we saw a pretty dramatic downturn. I mean, first quarter this year was 65% lower than the first quarter last year, 40% lower than the first quarter of 2020. So these are, this is a fairly dramatic slowdown. But rent growth has really continued unabated. For the first quarter of this year, national rent growth was about 2.8% for new leases. So at some point, price pressure begins to impact demand. I think we're seeing that certainly in certain markets, but we're also seeing that, we just discussed price class. The class B and the class C space, I think one of the explanations for the really dramatic downturn in demand there would have something to do with the rent growth that we've seen over the last year. Whereas class A, those residents tend to have higher incomes. They tend to, maybe be homeowners, potential homeowners at least, if there are any homes available to buy. And so, these people can somewhat absorb these rent gains a little bit better. But at some point, if demand doesn't pick back up, and generally we see a bounce in the spring and summer for our industry, it's a seasonal industry, obviously. If we don't see sort of that traditional bounce in demand, then just kind of in my own opinion, I don't see how rent growth wouldn't begin to slow here pretty imminently.
Well, wouldn't that be something to see? So you mentioned some specific markets in the article before we wrap up here. Was there anything especially interesting to take away there?
I think so. One kind of interesting kind of data point was the San Francisco, Oakland market, kind of the Bay Area of California. This is a market that really lagged in terms of recovery coming out of COVID. Even other markets in California like LA really kind of bounced back in a more robust way. And in the first quarter of this year, San Francisco, Oakland was near the top of the list for net units absorbed, a top 10 market in the country. Actually, I believe it was top 5. And so that was an encouraging sign, just again, for a market that had struggled a little bit to bounce back relative to other areas. And then sort of from the rent growth perspective, Florida continues to really kind of be a leader there. 5 of the top 10 markets for average effective rent growth in the quarter were Florida markets. And so again, when we talk about affordability or rent growth's effect on demand, it's worth noting that the Sun Belt markets have really benefited over the last few years, partially because of their affordability, which is now something with, you've got rent growth over 20%, or some of them are approaching 30% over the last 12 months, and that affordability picture begins to change, and we'll see if the demand picture changes. And then just kind of lastly, not a specific market necessarily, but net absorption was negative in the quarter for really a good portion of markets. About 40% of our markets around the country saw negative net absorption in the quarter. And so again, just kind of a main takeaway of sort of a quarter review is, 2021, we saw really robust demand that drove really robust rent growth. So far in 2022, we're seeing the robust rent growth, but not the demand.
You've been very, very busy, I know, with your schedule with not only editorial schedules, but speaking schedules. If you want to see ALN Apartment Data out in the wild, whether that's at an event or at seeing Jordan speak somewhere, we have 6 different trade shows that we're exhibiting at in May, and I'm going to put the dates and the places down in the description of the video. Once again, I'd like to make a special shout out for the TAA 1 conference and expo. It's April 27th through the 29th. It's in Houston, Texas. Jordan, you have a session there. It's called Everything is Bigger in Texas, especially apartment demand. And so I'm sure that we all look forward to seeing you for that. Don't forget to register for TAA and go see us there in booth 401. What else do you have, Jordan?
So in addition to TAA, next week, I have the ResMania event in Dallas being put on by Resman. So I'll be doing a session there, basically kind of a national look at what's been going on in multifamily and kind of some of the drivers of what some of the results have been, and maybe a little bit of a particular focus on areas like Texas and Florida. And then May 24th, I'll be in Los Angeles for the Apartment Association of Greater LA, doing sort of a market outlook presentation there specific to the LA area. And that's really it for me. Those three. So it's luckily I get a little bit of a slowdown in May as things currently stand after a pretty hectic March and April.
Well, keep your eye on our social media if you want to find links to all of these events and more. You can also go to our blog at alndata.com/blog, where we have excellent editorials other than just the monthly newsletter article that Jordan and I speak about. You can find us on social media. You can follow us on Twitter at ALN APT Data, or just search for ALN Apartment Data on Facebook and LinkedIn. If you're watching us on YouTube, don't forget to hit that subscribe button, click the notification bell so that you don't ever miss any new content as we put it out. Jordan, thank you again so much for chatting with us. It's nice to see the beard back in action. And we look forward to talking with you next month.
Thanks, Patrick. I'll see you next month.